Welcome to TMS Insights, a special edition following the US presidential election. Ben Clark and Jeremy Hook bringing you the update of what was a really surprising result in that election, with Donald Trump prevailing, sent markets into some sort of turmoil. And so the day after, we're just going to look at what it means for investors and how we position ourselves. So firstly, probably to deal with the event, Ben, a very surprising result, so like Brexit, in the fact that the pundits got it all wrong, and the people were deciding their outcomes quite differently to the way that the pollsters had it.
Yeah, I was listening to the radio this morning, and it's being now labelled as the biggest political upset in modern history, they believe. And I think it's one of these cases again, Jeremy, where people aren't telling polls how they are intending to vote because they feel that they don't want to be caught out on it. Similar to what we saw with Brexit, but obviously Trump hit a raw nerve in terms of there's a lot of disenfranchised Americans out there who feel that they've missed out on a lot. And, we also have a French election coming up, an Italian referendum this month coming up. So we're seeing this happen right around the world, and it's just something I think that we have to deal with as investors these days.
Yeah, and I think it probably means that there is this, they call it Tory shy element, that the Conservatives don't necessarily want to represent themselves prior to the election itself. So we have to factor that in. But it was a feared outcome from the perception of a lot of people and markets that Trump might win, because it would send things into some sort of chaos. Obviously, we saw a very violent reaction in the Asian markets, including our own, during real-time trading yesterday, but a steadying performance of the US market overnight.
Yeah, quite incredible, really. I mean, I think the Dow futures were limit down when I left the office yesterday, so they were suggesting a 700-point minimum drop on the open. But we've actually seen US markets rally, and that's probably a bit of a surprise to me. But certainly I felt 700.4 was a massive overreaction. Our job as investors is to try and take the emotion out of these things and to be pragmatic about it. I mean, Trump wouldn't be my candidate to rule the free world, but he is going to be the candidate, and so you have to think, what does it actually mean? And to me, it probably means not a lot in terms of global markets. What are your thoughts?
Well, I think it's really important to understand what a candidate says during a campaign and what they do in office. And the aura of the White House is something that will humble anybody, including Donald Trump, and bring him right back to the centre in most things. I think one thing that we will see, I think, to try to analyse the key areas that might impact, the one that will interest me most in the months and years ahead is trade. And immediately, obviously, the NAFTA agreement, which is something that he said quite publicly that he would like to repudiate. I think that and other trade deals with the rest of the world are probably the most important thing to work out whether there will be any change.
Yeah, and we've got this big Trans-Pacific partnership that looks like that now is off the cards, which will be a big blow to the Turnbull government. But I think you're right. I mean, probably one of the more extreme policies that Trump has suggested is imposing a 45% tax on all Chinese and Mexican imports. And if that were to be put in place, that would spark the biggest trade war probably in modern history as well.
Yeah.
It's very unlikely to occur.
I think the understanding of American politics takes you to the point that the president is, to some extent, substantially a head figure rather than the key political person or organisation. The White House is one of three major organisations that drives policy and change, and the two houses of Congress, though they are now Republican as well, which was also a surprise. Republicans come in multiple colours, and these are not the same sort of people as the very ultra-conservative Donald Trump during the election. So I think that's really important for everybody to understand, is that what actually gets legislated will be probably a lot more watered down than any of the very aggressive statements that we saw during the election. But there's also a positive too, Ben. Again, Trump is a businessman with an understanding of business and a real energy to drive America. Infrastructure, defence could be areas certainly get benefits, and we've got to understand as investors how to position ourselves.
Absolutely. I think if you can take some positives out of this, and in his victory speech, the one area he focused on was infrastructure. And we know that has massive multiplier effects for economies. we wonder how they're going to pay for it. But putting that aside, because I think this is something that he will have to really follow through on, is creating jobs in the heartlands and beefing up infrastructure. And ultimately that could be a big sort of thing for the American economy. And, you know, I think another thing is, at least now the Republicans do have control of the House and the Senate. So the more politically popular measures that he wants to put through, there's now sort of a clearer path to get legislation through. And we've had a logjam of legislation for over a decade in America now. Nothing really seems to get done. So if you're thinking, why have the markets taken the glass half full after a pretty amazing period last night, that would, I think, have to be one of them as well.
Yeah, absolutely. And I think just getting it back to home and to our own portfolios, the key thing here is, were equities cheap before or during this process or expensive? And I think our overwhelming view is that in this more recent period, particularly leading up to this election, pricing got better. Prices went down a little bit softer into this result. And again, we can see value in a number of stocks that we like and would continue to want to buy. There'd be a couple that we want to maybe taking profits on or move on, but do talk to us, give us a call and have a chat if you'd like to. But we feel that overall this is, while a very stunning piece of news for economics overall and markets, that it's something that will be taken in stride, notwithstanding changes that we have to be aware of, Ben.
Absolutely. And I think that's the main thing, Jeremy, is we'll be going through and sort of trying to think about, there will be, I think, some companies that might be some winners out of this. As an example, I think Trump will be a pro-gaming president, and that we've got some businesses that will probably benefit in that area. We've got some companies like, your James Hardys, etc., that could do quite well out of a building boom that could occur in America. And there could be others that we've got to think about that might, their outlooks might have changed somewhat. So we'll go through that over the next few weeks and try and get our heads around it.
Exactly right.
We'll go from there. But I think the main message is we'll go through this little period of uncertainty and turmoil in the markets, but not something I think people need to feel they need to go out and do something immediately about. Most companies will still grow their earnings over the next 3 to 5 years, and ultimately their share prices will follow that trajectory. And as long as we think that's still going to occur, see little need for change.
Absolutely. That's all we've got time for today. Thanks for listening.